Yo, what's up you guys? Welcome back to another video, and in today's video I want to give you guys a beautiful update on the Japan yen as well as AUDJPY, USDJPY as well as EURJPY from a technical and fundamental perspective. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the thumbs up for the YouTube algorithm, and let's try to get to at least 100 likes, my good friend. Now, first and foremost, for those of you that don't know, but the yen basket is just like the dollar index. It gives us an indication of how well the Japan yen is doing, and we use this as an indicator into checking from a technical perspective whether or not the yen is going to increase in value or decrease, and this trading any pair against the Japan yen there as well. Now, you can see that Japan yen has been very bearish for as far as the eye can see. But this basically comes from the fact that the prime minister in Japan does not want to hike interest rates. Now, what this means is that because the interest rate is still sitting at zero, it's not attractive to any investor to come in and invest in this currency. Therefore, we see the market continue this move to the downside. Here's a short article over here that I got from BBC. It says here basically, why is the yen sliding as much as it did? It says here the yen slide has been driven by the difference between interest rates in the Japan and the US. We've seen that the dollar index or the US, they've been increasing interest rates at a rapid rate, as opposed to the Japan yen has not raised interest rates for a single month even there as well. Since March, the Feds has been aggressively raising the interest rates from 0.25 to 3.25 with a 0.75 three times over there, as it tries to tackle the cost of the rise of living. High interest rates tend to make a currency more attractive to investors. This is what I say now. As a result, there is less demand for currencies from countries with lower rates, and and those countries fall in value there as well. So until we see a hike in the interest rates for the Japan yen, and the prime minister had said that they're not looking at hiking interest rates, can we expect to, at least another dip from the Japan yen over here as well? Now, if you start on the monthly time frame, we can clearly see that the market is currently trading below the strong level of support, came back, tested it as resistance. We also have that massive impulse. After an impulse, you expect a correction, and if you take your Fibonacci from the high to the low, we are testing the 0.832 and the 0.50 there as well. A continuation to the downside is definitely expected, unless the market, unless they decide to change the interest rates, which I don't see happening as well. From a weekly perspective, we can see the market broke below very strong structural level, came back, retested it, opened up with a negative gap. We can definitely expect the market to continue lower, potentially completing this inverted head and shoulders that we can see over here. So we are going to use this point as a point of reference from a daily perspective. What do we have now here on the daily time frame? If you look left, you can see that this is a very important structural level over here. Acted as a level of resistance. The mark broke above that, came to test it as support, broke below support, tested it as resistance, broke above resistance, back to test it as support. The market also printed previous resistance, as there's a green candle next to a gray candle. I do expect the market to just go fill in that gap and then definitely start this move to the downside, and for the yen to continue weaker for the rest of the lateral part of the month there as well. Next up, we do have AUDJPY. Now, because we expect the Japan yen to weaken, we need to look for some bullish momentum on over here. And what we can see over here is we do have the market printing this potential W formation. After W formation, you expect to pull back to the neckline before that continuation to the upside. So I do expect the market to continue higher. The only problem that we have over here is that we are currently faced with a very important structure. In fact, if you take that structure into consideration over there, so that basically tells us that we are trading in bearish territory, as we have a market that's basically stuck within this level over here. A clear break above this level on the retest will definitely make way for the market to continue higher and complete a W formation at the right leg there as well. Next up, we've got USDJPY. Now, USDJPY, it obviously dumped over here as a result of the USD that got weaker as due to the fact that the inflation had went lower and investors are now expecting the Feds to not hike interest rates as aggressive. The market had broken below this very strong level of, this strong level over here, acted as a level of support. We definitely expect the market to continue higher there as well. We can see that the market also printed this level of resistance. Once resistance gets broken, it becomes support. So I definitely expect the market to pull back to at least 0.382, taking the Fibonacci from the low to the high of that impulse. I do expect a slight correction before a continuation to the upside. As we're looking left, you can see that the market is also currently testing previous support as resistance there as well. I do expect the market to continue slightly lower and then continue higher to go test a previous level of resistance. It's now acting as a level of support. Next up, similar price action to AUDJPY, but this one over here, we can see the market had broken above this very important structural level. This level acted as a level of support. Market came back, tested as resistance, broke above resistance, now back to tested as support. We can definitely expect the market to continue higher from exactly where it is now to go and test that previous level of resistance there as well. Now, this is it from my side, you guys. So just one thing to keep in mind, it's very important that whenever you do trade a currency, you always want to look at how the index is performing, and if the index is look at the price action on from a technical perspective by looking at how well the index is doing. Then basically, if you see bearish price action on the index, you can definitely expect the the negative price action to continue across the floor for every pair trading against the Japanese yen there as well. That's why when you look at when you do a technical analysis for the Japan basket, you're basically doing a technical analysis for any currency trading against the Japan basket. And the same thing goes for the dollar index. If you expect the dollar index to increase in value, you are saying that you expect every currency trading against the dollar index to weaken there as value. As we know, all currencies trading on the spot, they trade against the dollar index there as well. That's all from my side. Thank you for your time. Anton Sneeman, SAIK. That's joking. Thank you for your time. And as always, cheers for ears.